welcome to ShareTreck. It is 10th of January 2021 and it's almost 1:20 in the afternoon. So today the VIXN is very, very strong and it has spiked quite high. As a result, the markets are down. I would, as usual, start with good news as I promised earlier. So I have got three really good news today to share with you. The first one is that Pfizer and Beam have signed a $1.35 billion deal. The second one is that Bayer of Germany and Mammoth Biosciences have signed a $1 billion deal. And the third news is basically that Allogen has been allowed by the FDA to continue with its cancer cell therapy testing, which was put on hold in October last year due to concerns in the data. I'm going to talk to you more in detail about these. I'll go to the website and open the press release from each of these companies, and we can later on go to look at the technical analysis side of it. But I was really heartened to see these new deals between Bayer as well as Pfizer, basically because if you recollect the last segment I had where I was talking about the outlook for CRISPR in 2022, I had mentioned that there are many things that might happen. One of them would be share dilution. The other would be a merger between two CRISPR companies in order to increase their synergies. And I had mentioned that don't rule out big pharma. So big pharma is actually moving in. And the first 10 days of January, we already have two big deals which have been announced. And these are going to strengthen the CRISPR companies. And also these are going to start creating a separate competency in the big pharma. They'll be moving from the traditional symptom-based medicines into what I would rather call as a root cause addressing medicine with the gene therapies. So here we have a page in the website that shows the press release. So Pfizer and Beam Inc., the $1.35 billion deal. This is a 4-year research collaboration that combines Pfizer's deep experience in global drug development, including programs utilizing messenger RNA and lipid nanoparticles and gene therapy, with Beam's leadership in base editing and mRNA/LNP delivery technologies. So Beam gets a potential total consideration of up to $1.35 billion, starting with an upfront payment of $300 million, and will further be eligible to get milestone payments of up to $1.05 billion. Which is over and above the $300 million paid so far, taking the total to around $1.35 billion. Research and development activities aim to advance potentially transformative therapies for patients living with rare genetic diseases. Beam may opt into a global co-development and co-commercialization agreement for one of the programs that they are contemplating. So that's what we have in this particular press release. Here is the press release, and they have put some major points out here, bullet points, but I would like to summarize it for you the way I understand it. It seems that Bayer is paying $40 million upfront to kick off the alliance, that is $40 million, which is focusing on the development of up to 5 CRISPR drugs that can be delivered in vivo for liver-targeted diseases. There is another $1 billion in downstream payments on offer, assuming the drug candidates all make it through regulatory approval and hit sales targets. While the main thrust of the new alliance is in finding in vivo therapies, Bayer is said to be also working with Mammoth on ex vivo projects on a non-exclusive basis. Because Mammoth has got tie-up with other companies also, that's why the non-exclusive basis caveat is out there. For Bayer, the new licensing agreement comes amid a push into the cell and gene therapy arena, which has seen it take a series of licensing and M&A deals over the last few years, including a tie-up with Mammoth's rival CRISPR Therapeutics way back in 2015. The drive gathered momentum in 2019 with the acquisition of cell therapy player Blue Rock Therapeutics, which has since been followed by a purchase of gene therapy and specialist Asclepios Biopharmaceuticals in 2020, and a deal with Atara Biotherapeutics for mesothelin-targeted CAR T-cell therapies for solid tumors. The Mammoth agreement will significantly enhance Bayer's efforts to develop transformative therapies for patients faster and strengthen the company's recently established new cell and gene therapy platform. So that in a nutshell describes what this deal does for Bayer. And I'm going to take you to the press release out here. So as you can see, we have a confirmed press release which was at 8:30 a.m. This morning. Allogen Therapeutics announces removal of FDA clinical hold across all allo CAR-T clinicals. So what happened in this case is that the FDA cleared Allogen Therapeutics to resume testing its cancer cell therapies after determining the company's technology wasn't to blame for a chromosomal abnormality observed in a patient who received one of the treatments. Now this is just one among 100 patients, but still the threshold is very high as far as FDA is concerned for these type of new therapies. So that's what we have. Allogen is developing its treatment for lymphoma, leukemia, multiple myeloma, and solid tumors. They consist of a donor cell engineered to find and destroy cancerous cells expressing a certain protein. A gene editing technology called TALEN is used to alter the cells so that they don't trigger a potentially dangerous immune response. Drugs from Allogene, CRISPR Therapeutics, and others have produced response rates in line with their CAR-T counterparts. They haven't appeared to be as durable, so both Allogene and CRISPR Therapeutics have started evaluating second doses to boost their effects. So that's what is happening with them right now. Allogene now intends to start what is meant to be a pivotal study of Allo 501A in the middle of this year, months later than its previous target of by the end of 2021 because FDA had put a halt. It's too early to say how the timelines of its other programs will change. So we'll revisit the pipeline page in the company's website or find information about the pipeline once it's updated and bring it to you. So this is what we have as good news for now. Having said that, I think we should now turn over to our technical analyst. Let's start off with the VIXN. The VIXN, which is correlated to Nasdaq, has spiked really sharp, and that's a bit of a concern because we have now gone past this diagonal red line that I had put earlier, which was respected as late as until 7th of January, and that has been breached. And we also went ahead and pierced through resistance at 29.58 and dropped back immediately. So we had to watch this very carefully because this is what is going to cause a problem for Nasdaq, which has dropped almost 1.65%. So that's a big drop. Earlier, if you recollect, we had a support at 14954.18. We went below that today, and our next support is going to be here at 14271.23, and this has to be marked in green. So this is our new support, and I hope that we stay above this. MACD is short as well as the momentum is weak, so things are not looking that great. Now let us go on to look at our shares here in the biotech sector. I'm going to sort as usual. Let's start with the good ones. Regeneron, Novartis, and Pfizer are doing very well, whereas Vertex, CRISPR, Editas, ArcG, Intelia, Blue, Beam, and TDoc, everything is down. So despite the fact that we had good news today about the deal that Beam had with Pfizer, we do not see that being reflected in the market. Let us go and look at what is happening in Beam, and I'm going to take a 5-day view to see if any difference has happened. Let us go to a 1-day view. No, not much has happened for today. Yeah, it's not looking as if there has been any impact of the news. That is because generally the overall market is not in a mood to look at anything. They just want to take their money and run. So this kind of a panic is not good. So we got to do some exercises to keep our mind steady and not take any rash steps. So I'm not going to go through all these shares today for technical analysis because it's a moot point. There is no rationality, it seems, in the market because Beam should have responded really well today for that tie-up which it had with Pfizer, and since it doesn't, I don't see any rationale in talking about technical analysis today. So instead, what I'm going to do, leave you with is my thought process on where we are with this market. It seems that everyone is heading to the exits, and things are looking very bleak indeed. So we don't know how low it's going to fall. I don't think anybody in the market knows how low things are going to fall. So as I said earlier, I think Vertex and Beam and Intelia are probably at the forefront of being able to monetize. But I would think that at this point of time, we should not do anything, just wait and watch how things are going. So if I zoom out and take an overall look at the market, I am thinking that there are a lot of factors at play which are going to impact the market. One is the low labor participation rate. So as we discussed in our earlier session, the labor participation in all kinds of activities, whether it's manufacturing or otherwise, is quite low. So that definitely is going to mean that employers will have to pay more salary to attract the scarce talent, or it could indicate that we are in a situation where companies' bottom lines are going to be hit because of employment costs, and they will have to pass it on to the customer. So how many companies are there which are in a position to increase their price in this environment and still have customers buying from them? So a few names come to my mind, and some of those are Apple, for example. I think it is resilient. Microsoft would be resilient. I think to a good extent Tesla also would be resilient in being able to do that. Another company that comes to mind is Oracle. So these are some of the companies I can think of which would be in a position to maintain their sales price. So that gives them a little bit of an advantage. So even though the whole market drops, I suspect that these companies will drop a little bit less than the others, because they also have solid revenue streams in place. They have proven product in the market. There's an established user base, and there are multiple streams of service revenues also coming for all of them. So that's a good thing. Now, if I look at a company like Tesla, they have put 2 plants in place before all these interest rate hike issues came up. So they have been able to get all their production capabilities in place, whereas their competitors like GM and Ford and others, they have to deal with all legacy platforms and then new investment into ramping up the EV segment. So the competitors are going to be at a disadvantage with Tesla. So those kind of dynamics will play. That is why those companies will drop, like Tesla, Apple, and Microsoft, in my opinion, will drop slower. Another company comes to mind is Amazon, because it has got cloud revenues, and in an integration marketplace gives a good competition, and they'll give the good value for money. Costco again is another thing that comes to mind. So these kind of companies will drop less. Now next we go to the kind of companies which already have products in the market, but they don't have much of a margin. And as a result of not having much of a margin, when the employment costs go up, or the costs of raw material go up due to supply chain bottlenecks, then those companies will not be able to pass all the costs on to the end customer. As a result, their bottom line is going to go down, and so their share prices will suffer more loss than the ones that can manage their clients to accept a higher sales price. So this is the second category of companies which will also drop, but not as much as the companies which do not have a product and are not profitable and are not paying any dividends. Those kind of companies are likely to fall much more, and most of our CRISPr shares are in that category. So the question then is, do I sell, or do I hold, or what do I do? So typically I would say that start dollar cost averaging, but honestly at this point of time I don't know how low things can fall. So this morning I do invest in other areas apart from CRISPr. So I did buy a little bit of Tesla, I bought a little bit of Amazon, and a little bit of Apple. I did dollar cost averaging out there. I'm looking very closely at ARCG, and I'm waiting for it to fall further before I make any moves, because I don't see how anything is going to improve in this environment until either the Fed comes and makes some speech which calms down the market, or the government, the federal government, comes up with an announcement that they have some release some package or given some kind of a stimulus. I do not see anything changing in the very, very near term of, say, the next 2 to 3 days. So I'm going to wait and watch. We just need to control our fear of missing out, and if we dollar cost average on a very, very careful basis while broadening our pile, it would be great. And I think in this environment where the interest rate is going to go up, it would be good for us to go more into growth stocks, more into value stocks, because they will retain their value much better and probably improve as the time goes by. But now it seems that the distinction between value and growth has kind of blurred when it comes to some companies like Apple, Microsoft, and Amazon, because as I mentioned earlier, they already have great revenue streams, established product, great control over the product pricing, a great market so that they can increase price if they have to. So they look like a mixture of growth and value. So that's where I think my focus would be, and I wish there were some CRISPR companies in that status. But the closest approximation I can come to is companies like Bayer, Pfizer, and Regeneron, and Novartis. These are the companies that come to mind in our space. Now, I'm also going to show you the other index we have, which I called the biotech adjacent. So these are the companies which are also participating in the CRISPR and base editing area by helping discover proteins and do a lot of in-computer simulation for various diseases. These are IBM with Watson and Google, Palantir, and NVIDIA. And as you can see, NVIDIA has suffered a huge setback. It has lost 2.56%. Palantir is down minus 3.41%, and Google is down 0.14%. Again, Google is another company that is, in my mind, as good as a value company, even though it's also a growth company. So that's another place where I would definitely do a little bit of dollar cost averaging. So that is what is happening in the bio adjacent sector. Now, if we look at the heat map out here, this is around 1:48 p.m. So this is what the map looks like. Everything is red. Everything is red, except that if you see in the biotechnology area, mRNA is doing well, and drug manufacturers general, we have Merck, AbbVie, SNY, BMY, Gilead, and GlaxoSmithKline. They are doing pretty well. Apart from that, everything is totally red. So that's the status with the overall market. Now, coming back to what I was coming back to my own thought process on how I would go about is that right now I do have quite a lot of shares which are in the red. The question is, do I want to sell? So I think the book value is there, and the accrued losses will be converted into actual losses only when I sell it. So because there is no tax incentive at this point of time, like if I sell and book a loss, I can't do anything with it until 31st of December 2022. So I would rather stay put where I am, and wherever there's an opportunity, I would definitely sell a few calls here and there just to make a few bobs. That to a short-term call like for the Friday. That's about it. I don't see much scope for me to do anything else other than pick up dollar cost averaging when I get a chance, and also to cleanse my portfolio of the really bad performing shares which have been in the red for more than 6 to 7 months, and which don't seem to be in a position to pick up when the market does. So I would move those kind of money into really, really strong companies like maybe Tesla or Apple or Microsoft, which are going to just jump back as soon as the situation normalizes. So that way I could break even on those bad investment decisions that I had made earlier. So these are some of the things that I'm going to do, but I will not be selling into this market. It doesn't make any sense. It doesn't make any sense at all to sell right now for me. So as usual, these are my personal opinions. Please do your own due diligence and consult your financial planner before making any investment decisions. So that's about it. And thanks for all of you. Our subscription numbers have gone up to more than 70. I'm really, really thankful to you for that. And all the likes that you have shown for my segments give me an idea of what you're looking for, and I'm going to bring you more of those. Please continue to like, share, and subscribe, and help us grow this channel. Bye for now. Have a nice day. Just stay safe.